Well, hello, traders and investors. Today is Tuesday, November 17th. My name is Roger Scott. I'm the head trader for Wealth Press. And what do I always say before we get in? Let's get into it right now. Now, first I'm going to talk about global economy. Then I'm going to talk about the stocks that are really looking strong right now and will more than likely outperform the market over the next few weeks, especially with the retail earnings better than expected. And I'll give you a stock, a real popular stock that I think is going further down. So I'm going to give you the industry that's moving higher. I'm going to give you 3 stocks in that industry and 2 of them should be no surprise. And 3, I'll give you a stock that I'm on the fence right now of. And it's a big stock. And if you own this in your portfolio, you may want to liquidate it or reduce your exposure. So let's start with global economy. Global shares are mixed. Look at this. We have a complete reversal of everything we saw yesterday. Yesterday, the Dow was up like 400 points before the opening, and the Nasdaq was down, and the small caps were up. Completely opposite. Now the FANG stocks are rallying. S&P, Dow, and Russell stocks are down. But again, overall right now, I'm going to tell you that the biggest weakness happens to be in the Nasdaq stocks. I know it's up right now pre-open, but overall, they are underperforming the market. In terms of strength, you're seeing the Russell, then you're seeing the Dow, then you're seeing the S&P, and then you're seeing the Nasdaq. Again, Russell is leading, Dow is second, S&P is third, Nasdaq is fourth. Basically, the smaller stocks or the industrial and basic materials are leading ahead, and retail is leading ahead of large cap tech right now. Large cap tech has been overleading, really overleading by a huge factor of like 3 to 1 this whole year, ever since the stay-at-home economy. But now with the vaccine on the horizon and all of this stuff coming around, the new presidential cycle for small caps is really good. We're seeing a reversal away from large cap tech and into smaller basic material, retail, and again, smaller stocks. So let's continue our analysis. Moderna, it's the new one, or the latest one, says COVID-19 vaccines appears to be almost 95% effective according to preliminary data. Let's see what that data shows a year from now. It's the second time in the month that the company announces such an encouraging number about the vaccine, boosting hopes that the global economy can return to some resemblance of normalcy. It's never going to be back to the same way again. It's too late to put that. It's too late to undo or unring that bell. But it doesn't mean we can't go forward in a more reasonable and a better prepared way. Even as the new surge in COVID-19 infections hit Japan, the economy rebounded. Japan's doing better than expected. The recovery has still not reached its pre-pandemic level, but such signs are raising optimism. This is really good because China's doing better than expected as well. Fitch Solutions Country Risk and Industry Research, this is a very, very important company to pay attention to, revised its growth projections for Japan this year to a more moderate contraction of 6.3% from 8.8% from 2021. Fitch projects a return to 2.7% growth, which is better than the earlier forecast of 2.1% growth. This is great. I'd love to see news like this for the U.S. The Tokyo Games have been postponed a year to the summer of 2021, and it looks like we're going to have it. International Olympic Committee President Thomas, visiting Tokyo this week, has sought to send a message of assurance that the Games will go on next year. That's huge. Risks remain for global markets, obviously. Even if the vaccines are approved, it's still uncertain when they will be widely distributed. You see here, right there, folks, it'll be uncertain when they're widely distributed. That's a sign that the world is finally absorbing this. When people start asking the right questions, when we start seeing more of the right questions, like, for example, how much is it going to cost? How am I going to get it? Is it safe? Is it effective? Do I need to take it? When you start seeing things like that, that's when the COVID will be more or less priced into the economy. We're just starting to see that. Notice that it's uncertain when it'll be available. Remember 6 months ago, we were saying, is there going to be a vaccine? So the deeper we get into it, the better questions the society starts asking, the closer we will be to assimilating this. The pandemic is continuing to worsen. It's bad in the States here with rising COVID-19 counts across the United States and Europe. Asia's doing better than expected, pushing governments to bring back varying degrees of restrictions. Some areas of U.S. economy have been slowing, particularly after big financial support programs passed by Congress expired. And crude oil, again, we're still near that $41 per barrel, where frackers in the U.S. are having a tough time developing it. Now, I wanted to show you something. Look at the indices. The Dow is down 200 points. It looks like we're going to have a little shake up here. I wanted to show you something important. This is the cumulative strength index. We've been paying close attention to that. Notice the companies that are leading now. Now, I like the fact that it's a lot broader than this was 6 months ago. Let's go to the time back machine. Let's go back 6 months, okay? You had, look at this, Regeneron, Gold, Nvidia, Dexcom, pharmaceuticals, right? It wasn't nearly as broad as it is right now. Right now, it's really broad. But what I'm liking here is I'm looking at companies that are doing some interesting stuff. For example, here's where I would focus. Retailers, specific retailers. For example, Coach is doing a lot better. L Brands is doing a lot better. Gap is doing a lot better. FCX is a copper company. This is not a regular company. This is a copper company. It's doing well. Align is killing it because nobody can compete with their Invisaligns. They are amazing for teeth. People can't see braces, which is something else. General Motors. I didn't expect General Motors, but General Motors is heating up. FedEx, SFB Financial, Expedia. So again, I would stick to these right here. But again, you've got Discover, you've got Qualcomm. You've got a lot of stocks going higher. But right now, I really like Gap, L Brands, Freeport, Align, and Albemarle. I talked about this company yesterday. All right. What they're doing is very, very cool. Lithium. I think 20% of the world lithium supply is in this ALB. 20 to 21%. Lithium. Biden taking office, Evergreen Energy. How do you power evergreen alternate energy cars? Lithium. Albemarle. I just learned to pronounce this yesterday correctly. So again, Albemarle, you've got lithium here. You've got copper here. You've got dentalware here. I like these stocks. I like the Gap. I like L Brands. I like FCX. I like Align. I like Albemarle and Carrier Global. What did I tell you about transports? Carrier Global, Coach is good, General Electric is good, and FedEx. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, I don't know about this SFB Financial. Let's take a look. SIVB. Let's take a look-see here. Oh, it's looking really good. Oh yeah, it's looking good. We may have to do a little profile on this stock. Financial holding, diverse banking financial products. I'm going to have to look at this. This looks really good. Look at these numbers. You may be seeing me do a report on this. But again, I like this SVB Financial as well. It looks really good. So let's just cap it up to right here. Expedia, all right? 11 stocks. Gap, L Brands, Freeport, Align, Albemarle, Carrier Global, Coach, General Electric, FedEx, SVB Financial, and Expedia. Now, I also have a stock on my cutting block. I know what you're thinking. AT&T, how can AT&T be in your chopping block? Well, it is hovering near all-time, or not all-time lows, but let's not get carried away. But it's hovering near multi-year lows. This is a 3-year chart. Let's go to a 10-year chart. Wow, we're near the lowest levels in 10 years on AT&T. Now, if you look at the stock, it made a 90-day low right here. Lowest low of 90 days. It's pulling up. It's above the 50-day moving average, making a 10 swing day high. If it trades below this level right here, if it trades below the $28 level, bye-bye AT&T. If it trades below 28, you'll probably have a short all the way to the 26 or 25 level, and I would put a buy stop to cover it right at the 29.35 level. So again, AT&T is a sell. As far as buys, I like Gap, L Brands. I like this copper stock. I like this teeth braces stock. I like this Lithium battery stock. I like this transport stock. Another retail stock, General Motors. I'm not going to tell you what they do. You probably know what they do. I like FedEx, this SVB Financial, and Expedia. Folks, before I let you go, I've got something explosive for you. I mean explosive. You're going to want to you're definitely going to want to mark your calendar with this. Today, 1 p.m. Eastern Time. Yes, today, 1 p.m. Eastern Time. I'm pulling back the curtain on my algorithmic trading strategy that leaves traditional stock pickers in the dust. I mean the dust. You see, my Storm technology, it mimics the billion-dollar algorithms that Wall Street uses to send stocks soaring in a matter of hours or plummeting to their death. Both, one or the other. And I'm able to do that with just a few clicks or a few lines of code. Not even a few clicks of a mouse, a few lines of code. Very, very powerful stuff. Don't believe me? Ha! Click the link below now and see how it works for yourself. Folks, you don't want to miss this. Algorithm trading makes up for about 80% of all the stock market trading action. If you don't get in on it right now, you are going to miss out big. Our Storm technology has been banking triple-digit gains all last month, all last year. We've been outperforming the market by a factor of 30 to 1. You have got to check this out. Follow the link below, get all the details now, and I'll see you at 1 p.m. Eastern Time. Bye, folks.